Good morning. Welcome to Forex In Four. Today is Wednesday, September 21st, 2011. We're looking at the euro here, and we still have the ongoing crisis, debt crisis going on over there with what's going on with Greece. They're still waiting to approve the next tranche of bailout money to Greece, and apparently all the news coming out is that Greece is making all the right steps in that direction. But again, we have no actual decision, and it's starting to weigh on the markets a little bit. So you can see here that we've just sort of established this new trading range here over the past 5 days or so, where we've been in this 136, 137 area, and it looks like maybe we're going to come back down and retest the lows here at 136 before all is said and done. We've got some mild risk aversion going on in the markets this morning, though there's not a lot of new news happening today or that has happened already today that would make this anything significant. The big news later today, is going to be a U.S. FOMC meeting, the Fed. I'll get to that in a second, but first I just want to touch on, let's take a look here at the other news items of the morning. Okay, we got the British pound here. I'm just going to pull this out and show you on the 5-minute chart so you can see the volatility. But essentially what happened here is they had the release of the Bank of England rate policy meeting minutes. All right, and essentially what that means is that you're getting a sneak peek and a look inside of what the actual decision-making process was at the B of E. Initially, what had happened is that when the news came out, all right, the pound actually spiked a little bit higher before selling off a bit here. And essentially, what's happened is that they voted unanimously to keep rates steady where they are. And I think the market was expecting that more people were going to call for quantitative easing. All right, there's been one guy on the board who, coincidentally, is an American, has been calling for further quantitative easing for some time now. So there was a hope or an expectation that there would be more people joining him, and in fact, that hasn't happened yet. So while they have issued a dovish statement, all right, and they said that their next move is most likely going to be further quantitative easing, not a rate reduction, if they should go down that path. All right, they noted that there's been recent economic weakness, and they're keeping an eye on the situation. So they didn't change rates. If they do anything in the future, it's going to be in the form of further quantitative easing and not a rate reduction. Okay, and no number of people have changed on the board, so no one's flipped over yet to say, okay, we need to have this quantitative easing now. So they may be just a little bit further removed from that, but you can see here we're retesting the lows here at about 156.20 right now, and I'm just going to back it out a little bit to the 30-minute chart, and you can see that the trend here has been lower for the pound, and that's not to be unexpected. All right, the other news this morning is coming from Canada. Let's take a quick peek at Canada. All right, you can see not much happening here. This is a 30-minute chart, and U.S. dollar has been on just a very steady sort of rise here. Hasn't been moving much versus the loonie. We're heading up towards parity. I'll break it down to the 5-minute chart for you. Okay, and you can see here there was just a big move when they announced their CPI data, and in Canada, CPI data came in higher than expected. They were expecting a 2.9% inflation. Okay, they got 3.1 on the headline figure. All right, the core number came in at 1.9% versus the expected 1.6%, and the month-over-month number was up 0.3% versus an expected 0.1%. So it looks like inflation's picking up in Canada, but when you look at these numbers, 3.1%, that's not an egregious amount considering where some of the other countries are, particularly England, for example, at 4.5%. So, inflation is starting to creep up there, but it's looks like it's fairly well contained at this point. But nevertheless, we've got some dollar strength here, and part of the reason for the dollar strength is that we've got the Fed meeting today, and the market is basically expecting what they're calling Operation Twist, and I explained this the other day, but I'll just give you reiterate it for those who haven't been following. But essentially, what the Fed's going to do is they're going to take the money that's on their balance sheet. Okay, they've been buying short-term securities. Now they're going to take that, and when those securities mature, okay, they're now going to use the proceeds from that, and they're going to buy longer-term maturities. What that's going to do is that's going to increase demand for longer-term securities, which should push price higher. When prices go higher on bonds, that means yields go lower. Okay, that's how they're going to drive down interest rates for longer term lending and for interest rates. So, is this going to do anything specifically to the market today? I'm not sure. To be honest with you, I think right now the Fed is pretty much just pushing on a string in that all of their moves and all of their actions really aren't doing a whole heck of a lot. All right, it's not a liquidity crisis that we have. All right, it's not that money isn't cheap enough. It's a confidence crisis. Okay, people are afraid of what's going on in the economy, and they don't want to borrow money, regardless of how cheap it may be. All right, if I had to go out and say I'm going to buy a house today, I'm having second thoughts about it. I'm concerned about my job. I'm concerned about higher taxes. I'm concerned that regulation is going to cause higher unemployment. All right, so I'm not making any big purchases, and that's one of the things that people are concerned about. So, we're just watching oil here. This is West Texas we're watching, and you can see just broke that 86 handle. Now we're trading about 85 right now, and you can see that the market's slowly starting to slip into more risk aversion this morning. So oil's selling off. We've got the S&P that's selling off as well. Okay, we had been sitting up above that 1200 area earlier, and let's take a look at gold here and see what's happening with gold. Okay, we've got gold also coming down just under 1800. So what the market's expecting is that because there's not going to be any additional easing or quantitative easing as some might be expecting, they're not expanding the balance sheet. All right, it's really not going to do much in the way of lowering the dollar. If the dollar's not going to go down, it's probably going to go up. So if the dollar strengthens, that means we're going to see some weakness in a bunch of these other currencies. So just flipping back to the euro here, okay, I'm guessing the euro's picked up its selling a little bit as well. So sure, we're heading back down towards that 136 area. So that's really what we're looking at today. 2:15 Eastern Standard Time is when this Fed decision comes out, and again, everyone's expecting Operation Twist. Should they surprise with some sort of further easing, okay, then we could see some dollar weakness that would flip everything around on these charts. All right, but right now, I just don't think they have the will to do it. Okay, Republicans sent the Fed a letter, which doesn't add up to much, but telling them not to do any further easing. All right, and then of course you got from the other side of the aisle. Okay, you got them trying to remove some of the board members from the Fed there. So I'm not exactly sure what that situation was about, but essentially trying to limit groupthink at the Fed because we know that Bernanke basically can do whatever he wants to do as the chairman. Okay, while there is a Fed board of governors, all right, Bernanke's vote is final, and what he says goes. So that's how it works there. So right now, it's just going to be sort of a wait and see game today. We'll see what the markets do. There could be the thought that people are going to move into stocks today. If you think about it, if you're an investor and you're looking to put your money somewhere, well, if you're going to get lower yields on longer dated securities, all right, I mean, people used to do things like bond ladder and things like that where you're looking for this interest income that's going to happen. Well, if you're not going to get it in the long term because of Operation Twist, which lowers interest rates, perhaps that'll be positive for stocks. So that's the only way I see this thing really playing out and making a positive move for risk appetite. Other than that, it looks to be more shucking and jiving and tinkering and jerry-rigging the economy. And until we get the fiscal house in order, we're going to have this uncertainty, which is going to continue, and that may go right up until the 2012 election. So it could be a long haul, folks. So anyway, that's what we're looking at today. Keep an eye on the FOMC deal, and good trading to all.